Hello, gentlemen. Greg Michalowski with ForexLive.com. It is Friday. We're heading into the afternoon session in the New York session and looking forward to next week's trading. So it's that time to take a look at the dollar versus Swiss from a technical perspective as we wrap up this week and look forward to next week. So let's get started. All right, like a lot of the other currencies, the dollar versus Swiss is moving to the downside. That is a dollar moving to the downside against this currency pair. And in trading this week, we did fall below the below the 200-day moving average. We broke above it in trading last week and traded above it, below it on Monday, and then tried to hold above it through here, but could not, and fell to the downside. It was kind of messy, but the moves above the 200-day moving average have been, I wouldn't say short-lived, because this is a 4-hour chart, and this is a number of different bars, both here and here, where the price traded above that 200-day moving average. So certainly the buyers had their shot, okay? The buyers had their shot, and eventually the market said, well, you missed, and now it's time to go to the downside. Helping was the break below the 100-bar moving average on the 4-hour chart. And down here, we in trading here today, we fell below both the 100-day moving average and the rising 200-bar moving average on the 4-hour chart. That's this green line, so which are basically converged at 0.87. 5.8-ish, 5.6-ish type of area. So that moving below that level was more bearish. Now, the price did have its limit to the downside, and this red line right through here, which I'll overlay with a larger red line, shows the level where the market did find some support buyers. You can go back to this low right here, and these lows right through here, and this low right here, and then breaking below in this high right here, and this a returned high right here, where the price used that level as resistance. We started trading above it, below it here, and then used this level as support to move to the upside and on the downside. And then the market came back down and tested the 100-bar moving average, found support buyers, and moved higher. And the last move in trading here today came down to that line and found support. So that level comes in at 0.87277, and right now we are looking at staying below these moving averages, more bearish, and moving below the 0.8727 level would add to the bearish bias, and have traders looking for the broken 38.2% retracement at 0.8680. So this is close risk for sellers. We've been above and below it over the last few bars, as you can see, or the last bar. So there is some apprehension. Another level that might be a more conservative risk level for sellers, especially who are looking for downside momentum on the failed breaks to the upside this week, would be the 50% midpoint of this move to the downside. Staying below that 50% retracement level would keep a lid on the pair, and you can see in trading here today when the price moved lower and then came back up, we did find early sellers against that level before the market moved lower after the US data. So watch that level at 0.8787, a nice symmetrical number, I guess. And as a risk level on the downside, we need to get to 0.87277 to increase the bearish bias in the dollar versus Swiss. That's my look at that currency pair as we head into the weekend, as we head into the new trading week. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.